Here's your host, Giuseppe Grammatico, the franchise guide.
And number 5 on Buffett's 5 rules that we summarize for today would be managing risk. Managing risk starts with your due diligence, and that goes back to long-term viewpoint and reiterating his rules, staying informed, maintaining a competitive advantage, focusing on quality. And managing risk is really going back to say, okay, what are the risks? What are the threats in the industry? Will AI affect my business and or service? Are there more competitors moving in and offering a similar type of business, specifically in the market I am in? How do I manage risk? Well, I also look at things when you're starting a business, and it's managing your cash flow. I always say when you own a business, you're always going to find ways to reinvest back into the business. So a big part of that is, okay, I had Rocky Lalvani from Profit First, and it's paying yourself first before expenses, figuring out a way to say, okay, for every dollar that comes in, 20% are going to taxes. I'm making these numbers up, 30% operating expense, maybe a 10% profit kind of distribution, and the rest goes to the owner's salary. And that way you're managing risk in that you're not overspending in certain areas by not having a budget and you're knowing your numbers so that you're figuring out ways, okay, do I have to cut costs? Managing risk also has to do with KPIs, reviewing the numbers, making sure you have enough lead flow. If you're having enough lead flow, is the quality there? Is the salesperson able to close those specific deals? And the same goes when you're investing in the stock market, managing risk, looking at, you're going to have the advantage of being able to look at the financials. Is there a lot of selling being done from the corporate office? Are they buying back company stock? Has there been continuous growth? Is there a plan? It's doing your homework and not going into anything blind. And that goes back to owning and understanding your business and industry. When you're managing risk, you're doing the due diligence upfront. Again, you're never going to be 100%. You're going to do as much research as you can on a franchise. You're going to talk to the franchisor. You're going to talk to the franchisees. You're also going to meet with the franchisor at a virtual or in-person discovery day, but you're doing your due diligence the best you can. Same thing when you're investing in a stock, in a publicly traded company. You're going in, you're looking at the numbers, you're looking at who owns the business. Is there a lot of selling? Is there a lot of buying? Has there been growth? Where does the company see itself? So there's a lot of analyst kind of research, which is helpful, but just knowing where the company is going, that information is all readily available. You can find that on Google Finance, but just seeing where that business is going to figure out, hey, it has done well, but that past performance, will that help and predict future performance? And not necessarily, right? We want to make sure that the company is still being innovative, utilizing AI, cutting costs while still growing and really increasing the bottom line, which at the end of the day, we want to be profitable, but we don't want to be so profitable that we're pulling so much out of the business that we're hurting growth by not reinvesting in technology, by not adding headcount and staff and things like that. To recap Warren's 5 rules, you have potential building wealth, including investing for the long term, staying informed, maintaining a competitive advantage, focusing on quality, and managing risk. And as I mentioned at the beginning of the show, focus on not losing money. And rule number 2 is don't forget rule number 1. So obviously, no one goes into business with the intention of losing money. But I think when you start a business, the intention is, let's make money. Let's get systems in place. The franchise will give you that competitive advantage, but let's reinvest back in the business. So we have the blueprint. We know exactly what to do and the systems in place, but we want to make sure to increase headcount should the demand be there in the market. So a lot of great stuff. I wanted to do this quick show because, just as I mentioned, I've been following Warren for over, I would say, close to 30 years now. Love what he's done. Back in the day, value investing really didn't appeal to me because it was the tech bubble. So it seemed like anything you purchased went up in price and in value until that bubble burst. Warren has always had a long view, a perspective on how he approaches his investments. And I think you can use those philosophies to find your business. Focus is big. Know your market. Don't spread yourself too thin by having to invest in every single investment out there to feel like you're diversified. You could be diversified, as Warren mentioned. His advice, and I heard this on a previous call, was investing 90% in the S&P index fund. It could be Vanguard. It could be the Spiders SPY. and then 10% short-term government notes. And that will be one way, dollar cost average. That way you're getting full access to the market. You're getting a little bit of cash flow in there as well, and some diversification. So it's very hard to continuously beat the market. Warren and Berkshire have done that consistently. And yeah, I just wanted to give a shout out to Warren. Warren, if you're listening, we'd love to have you on the show. Maybe I'll have him on as who may have some more time on his hands, but really appreciate your words of wisdom. We'll put the link there. So if anyone wants to check out the video, really inspiring stuff, and be curious to get your feedback. Wanted to mix things up a little bit. The investment world, it's hard to find financial advisors that are able to come on the show. There's so many rules and regulations and topics and things like that. And we're not overly structured. We like to have open and honest conversation. Considering I come from the investment world and I'm no longer a financial advisor and not giving any type of financial advice, just things to think about as someone like Warren. And I think that his last meeting here before the new CEO takes over was definitely inspiring, and definitely learned something from that talk.
Thanks for tuning in. If you want to learn how to make the transition from corporate to owning your franchise, join Giuseppe on the next episode. You can also follow on all social media platforms and achieve financial and time freedom today.